So the first thing is a lot of the growth in the last year is on the back of this crazy artificial intelligence mania. We haven't seen these kinds of investment rates since the dot-com bubble. If you strip that investment out, underlying growth is closer to 1%. Right? And I think that is a much better signal of where the US economy is.
So President Trump, he's really thrown what he could at the world. The world is still spinning.
Yes.
I think we're okay, right?
For me, the worry is not a recession this year or next year. My worry in the last 9 months is that the very things that have made the US exceptional the last 8 years, President Trump is taking a hacksaw to those things. To immigration, skilled and unskilled, to free trade, and to academic institutions which represent this learning. So for me, I think we're very early in this process, and the damage, if any, will be evident not now, but quarters and years away. To say
$1 trillion, I think just OpenAI is going to invest in the next 8 years into this technology. So what happens from here on?
First is, as I mentioned, I've never seen such mania. Now, why is there so much AI mania? Because there's a belief among some this is going to be more transformational than the advent of fire. Total investments in data centers last year was 400 billion. This year is 600 billion. People are saying by 2030 it'll be 3 to 4 trillion. So this mania is just starting.
I remember I read this as Isaac Asimov's story many years back, and this is like a future world.
Yeah.
So there's this worker whose job it is to tighten the bolts.
Right.
Okay. So you get universal basic income. If you press buttons, you get a basic meal. That's free. But if you want an egg, then you need to work. And his work was to tighten the bolts. And one round of that building takes him a year. One day he meets somebody coming from the other side. So he says, "What is it that you do?" He says, "My job is to loosen the screws." When you hear things like Mayor Mamdani talking of rent control and free, is there any example in the world where rent control or wage control or minimum wage has actually benefited those that it was aimed at?
And I think we shouldn't lose our sight of the fact that there is a growing class of people around the world who are facing a lot of economic anxiety, right? Because capital has taken the large share and income and labor is falling behind. And putting our heads to how to resolve that tension, I think, is a real one. Look at the state of Tamil Nadu, for example. I was in a conference recently where I'm so impressed by what Tamil Nadu has done. So many multinational companies have come up and set up. Manufacturing is growing very rapidly in Tamil Nadu the last 3-4 years. And the model is very China-like. You've got dormitories on campuses. Half the labor force is women, highly skilled, who are staying in those dormitories and being, and so some states have shown how this is done. And the hope is...
Welcome to the Growing India podcast. I'm Monika Halan. I lead conversations with thought leaders in economics, policy, geopolitics, geoeconomics to deconstruct this increasingly complicated world. The Growing India podcast is a joint initiative between Groww and me to talk about India's most pressing issues. Today, I have the erudite and articulate Dr. Sajjid Chinoy. Welcome to the Growing India podcast. Thank you for making time. And how's the Delhi air treating you?
It's great to be here, Monika. Unfortunately, I've had so many meetings, haven't been outside.
Okay.
So fortunately.
Fortunately.
So I haven't experienced Delhi air.
Yeah. Because when I open my door in the morning, everybody in Delhi has a purifier. So the minute you open it, you see the reading just go from blue to red, like in literally 3 minutes, that reading is red. So, but anyhow, but you've just come in from DC. I understand. And this was on the sidelines of the World Bank, IMF meetings and all that. I'm getting such a contradictory story about the US. And this is something I thought I'll unpack with you. Policy crowd doesn't like the manner in which President Trump shares too much information.
Right.
It's a TMI White House, too much information.
Right.
But some things seem to be working. The economy is ripping. So is the market. The tariff revenue is 300 billion, I guess, in this year. Mm-hmm. Correct me if I'm wrong. But we are beginning to see signs of weakness. Cracks. Some of the cracks are beginning to show with unemployment data. Inflation is a worry, but the rate cut process has started. We are seeing tension on the credit side. The student loans, the credit cards, and the home mortgages. Other than the tech stocks, the market is flat. Tell us, like, what are we looking at? What is happening in the US? Is it going to be a hard landing? Is it going to be an implosion? Or will he actually, like, through sheer bully power, pull it through?
Pull it through. Great question, Monika. And again, great to be here. So there's just so many layers of unpacking the US economy. I think what struck me in DC was the amount of uncertainty and division in the policy community, the analyst community, the economist community, right? And nobody's quite sure where this is going. So let's look at on the surface, everything looked great. Third quarter GDP in the US is tracking close to 4%, right? We economists had said a recession is coming on Liberation Day. Far from that, US growth is accelerating. This is an economy whose potential growth is 1.5% to 2%, growing at double that rate, right? And so the first instinct is to say, well, economists were wrong again. And this is the worrisome part, that tariffs don't have the pernicious impact that was made out to be, right? Markets are on fire. But let's unpack this. So the first thing is, a lot of the growth in the last year is on the back of this crazy artificial intelligence mania. Right? We haven't seen these kinds of investment rates since the dot-com bubble. Right? If you strip that investment out, underlying growth is closer to 1%. Right? And I think that is a much better signal of where the US economy is. If you look at the labor market, the last 3 or 4 months, basically corporates and employers have stopped hiring. So there's basically jobs have come to a standstill. They're not firing as yet, but they're not hiring. And we've never had a situation in modern history where capex is so strong, but the labor market is so weak. Now, there are more puzzles here. First is the government shutdown means there's no data. So for the last 2 months, we're all flying blind. What's happened? There's been no data for the last 8 weeks. Is the labor market just reflecting the immigration curbs? That the new normal is going to be 20,000, 30,000 jobs a month because that's what the new break-even rate is since immigration has stopped. That's the most benign, charitable explanation that, hey, this is the new normal in the labor market. It doesn't suggest that the economy is going into recession. Or is it the fact that at these levels, employment typically plunges and you're on the cusp of a larger recession? Most people tend to take the latter view, that these levels of employment are dangerously low, right? And at some point, that's going to push the economy into recession. So that's the debate right now, that yes, you've got one sector of the economy, narrow sector, which is growing very rapidly, but it's not at all symptomatic of what's happened to the broader economy, where household labor incomes are slowing because employment has slowed. And you know what? Inflation is slowly but surely building under the radar. Core inflation is going up every month. This process is playing out much more slowly because the mistake that most economists made was to presume that these tariffs will, come into motion immediately. What actually happened on Liberation Day, the president said about 25, 26% weighted average tariff. He then walked it back. Today, the weighted average tariff is about 17 or 18%, still prohibitively high, the highest since the 1930s. But the realized tariff rate, which is the actual revenue collected at the border divided by imports, is only 10%. So we were supposed to go from 3 to 26. We were then supposed to go from 3 to 17 or 18. We've only gone from 3 to 10. And part of this is because water finds the path of least resistance. So China, for example, has high rates of tariff imposed on it. ASEAN's got much lower rates of tariff. So what does China do? It ships goods to Thailand and Vietnam, and those get rerouted to the US. So the effective rate today is much lower than what was feared. And furthermore, corporates that are importing are absorbing these price pressures and passing it on to households in homeopathic doses. So my sense is it's too early to claim, the US has bucked tariffs, because this is very much an ongoing process. Effective tariff rates are going to rise over time, and you will see corporates passing this on more and more to households. Now, at that point in time, if the labor market is broken, then you are you're very close to a recession. If for whatever reason you can skip, the labor market is more resilient and households can absorb these price increases, then the US could still get by. It'll bend, but not break. So it's a very complicated prognosis because there are many moving parts.
So President Trump doesn't shy away from taking a U-turn no matter what he has said, if it works for either his ego or the country, he will quickly take a U-turn. So in all that you have said, if things start going south, do you not think that a person like him will quickly recalibrate so that the country doesn't go into a recession? So look, I'm not a great fan, but I'm just watching him very non-emotionally and not, you don't get involved in the drama, but you just watch what he's doing and you observe that he's doing what it takes to reset an equation which was very unfair to the US. Okay? So it was a situation which could not have carried on. It's just that he's done it in a manner, he's used the hammer very bluntly, and again, this oversharing of emotions on his social media platform, it doesn't help things. But don't you think he will recalibrate rather than allowing the economy to crash? That's one. Second is, he's really thrown what he could at the world. The world is still spinning. I think we're okay, right?
Great question. So there are many levels to this. It's a really good question. So let me take it slowly. The first is, let's give President Trump credit for efficacy. He said what he's going to do. People doubted it.
For 30 years he said it.
Yeah, exactly. And in the first year, he's done what he promised on trade, on tariffs, on immigration, on the fiscal bill. Now, he's a pragmatic politician. But as you just said, there are some things that are deep-rooted in his belief system. The belief on tariffs stems back to the 1980s, when Japan was running large trade surpluses with the US. See, President Trump sees the world as being zero-sum, right? That if Japan is winning, the US must be losing. For the US to win, somebody else has to lose. We're approaching the 250th anniversary of Adam Smith's Wealth of Nations next year, I think, right? What was the essence of specialization and exchange? Then enumerated by Ricardo, that trade is win-win. Both you can win and I can win when we specialize in what we do and we exchange. But President Trump hasn't had that view. Because tariffs are so deep-rooted, it's unlikely for me to believe that if there's trouble in the economy, that he will renege on his most deep-rooted belief. The test is going to come early. The US Supreme Court is listening to this thing on IEEPA. So IEEPA is the International Economic Powers Act, which was imposed in 1977, which gives the president carte blanche to impose tariffs. Now, the challenge is that there are other sections of the law, 122, 232, 301, which have got, there's a higher burden of proof. You have to prove that somebody is cheating, either at the sector level or country level. So the challenge is, well, if those sections required so much proof, then and you can do it under IEEPA, it invalidates the necessity of those sections. The Court of International Trade has upheld that. The Supreme Court's first hearing seemed very skeptical. If that gets overturned, a practical president would have said, okay, we tried, the court said no, let's go back. No. Everyone believes that if that gets struck down, the president will use whatever tools he has at his disposal, these other sections of the law, to impose tariffs. So I think while he's pragmatic, on trade, the beliefs are so deep-rooted, it's unlikely that they're going to turn back. Immigration is not just, is working very well for him politically, right? We economists have a problem with what's happening, but the politics is very much in his favor. So I think on these two issues, it's unlikely he's going to turn around. Now, you spoke about, he's thrown what it has and the world is still spinning. Who said this? That in economics, things take much longer to happen, but when they do, they happen much faster. For me, the worry is not a recession this year or next year. For me, the worry is US exceptionalism since the Second World War has been predicated on some fundamental tenets, right? Higher education. They have the best higher education system in the world. It's the dissent and innovation are two sides of the same coin. When you allow dissent, that's why the US is the center of the innovation hub of the world, right? Immigration has allowed the best skilled people from around the world to go to the US, make that country their own, and take it to greater heights, right? Free trade has allowed the best ideas to flow in and out. My worry in the last 9 months is that the very things that have made the US exceptional the last 8 years, President Trump is taking a hacksaw to those things. To immigration, skilled and unskilled, right? to free trade and to academic institutions which represent this learning. So for me, I think the jury is still out. We're very early in this process, and the damage, if any, will be evident not now, but quarters and years away, to say, can the US maintain its exceptional stance? Let's remind ourselves, it's the only economy in the world in the last 7-8 years that is above its pre-pandemic path. Now, one can quibble and say that, it's because the fiscal was too expansive. But these other tenets have been, have underpinned it.
No, so I hear you when you talk about immigration being an engine of growth, with their the freedom of speech and the allowance for dissent in the universities. But I would look at that in the 4 years of Biden, that the pendulum swung so far left with the illegal immigrations, like the millions who poured across the border. I mean, we've seen those videos.
Right.
That was absurd.
Right.
I mean, you don't allow military-grade young men with a certain agenda to just cross your borders freely. And we saw what happened, especially after COVID, in the universities, in terms of the sort of wokeness, which was like, we have friends whose children are there. And they say, you have to be so careful with what you say, because you are not allowed to say things which that extreme woke left group does not agree with. So don't you think that the pendulum on these things swung so far?
No question.
That it is going to swing very badly to the other side?
Absolutely. Things swung too far to one side. They've swung to the other side, which is why you noticed the last set of elections last week. The Democrats stayed very far away from any social or cultural issues.
Right.
The issues are all kitchen table economic issues. And listen, there's no doubting that there is a problem that the US has had in the last 40 years. And President Trump rightfully diagnosed this problem 10 years ago in 2015-16. And the problem is one of massive increase in inequality. So if you look at US inequality, there's a sharp increase between 1910 and 1930. There's a sharp compression. And from 1940 to 1980, the US is considered a less unequal society where prosperity is shared. Then you get this huge increase in inequality in the US, right? It's not just the top 20% pulling away from the bottom 80. It's the top 1 pulling away from the top 20 and the top 0.1 pulling away from the 1%. And the question is why? There are many explanations. Is it technology? Is it globalization? Claudia Golden won a Nobel Prize for saying it's skill-biased technological change. All the technology in the last 50, 60 years has rewarded high-skilled people at the cost of low-skilled people, and that's made inequality worse. Nobody doubts there's a problem. There's a very real problem about income inequality, about median wages. It's just that the solutions that have been proposed on tariffs, right, are not the right ones in my mind.
Yeah, and all of this sort of dovetails into this inequality becoming even worse because of AI.
Yes.
The productivity gains will go to a few.
Yes.
So actually, lots of questions here. One is that we've seen in the New York mayor election, free bus rides, free grocery stores, rent control, all of that coming in. So first is that capital will win against labor. Yes. So there are two. So for viewers who are watching, there's factors of production, land, labor, capital, technology, enterprise. I mean, we can keep adding, but land, labor is your land, labor, capital. The way that we see it, owners of capital are going to be exponentially doing better in the years ahead, right? Peter Thiel said something recently, I'm sure you've read it, that voters will demand socialism when they don't own capital or don't see themselves owning capital in the form of own homes and other assets. And with these elections, we've seen this whole move towards free stuff.
Right.
Okay? And in India also, we are giving 800 million people free food. What are the chances of a universal basic income coming in across the world? Simply because in a democracy, China is a different story.
Right.
But in a democracy, the votes are with the people who are outside of the bell jar.
Yes.
They will be voting in free bus rides, free food, free cycles, free. So where do you see this world going from here on? Because the democratic process will ensure that the freebies win.
Right.
But that's not what the owners of capital may want. So there is this tension between labor and capital.
As there always has been. And I think.
But it's going to be even more.
Absolutely.
$1 trillion, I think just OpenAI is going to invest in the next 8 years into this technology. And you can multiply it with all the other players. So what happens from here on to the economy, to the politics? Productivity gains are going to a few people.
So great question. Again, many layers to this. We'll take it one by one.
Yeah.
First is, as I mentioned, I've never seen such mania. Now, why is there so much AI mania? Because there's a belief among some, this is going to be more transformational than the advent of fire. Right?
Wow. I've heard
Professor Nouriel Roubini, who's not always considered the most optimistic person, has said this in Washington, D.C. Now, the belief is that this technology is going to allow exponential returns, right? Productivity growth will become exponential with. This matters because previous technologies have been more concave. If growth is going to be concave, it actually pays to be the second mover. Because at some point, the first mover will reach a plateau. You can learn to see what the mistakes of the first mover are, and then you can correct those. But when you are in an exponential process, it's a winner take all. By construction, the person who's first on that curve will never be caught up. That's why you're seeing these massive levels of investment, because everyone wants to be the first mover advantage. This reminds one, if you look at what some work the Richmond Fed has done, this is very similar to the telecom boom of the 1990s. If the trajectory is very similar in terms of investment, what it suggests is you're very early in the process. This could go on, these investments could go on for many years. Total investments in data centers last year was 400 billion. This year is 600 billion. People are saying by 2030, it'll be 3 to 4 trillion. So this mania is just starting. Now, it's also possible that in the long run, this technology will find enough use cases, will materialize like that, right? But you could have a bust somewhere in between. The more fundamental question is what you touched upon, this race between capital and labor. And I think even before AI, if you go back to the 1980s, what you see is the capital share of income globally rises very rapidly and the labor income begins to fall, right? And that's what's led to concern in the last 3 decades. It led to Brexit. It led to the Trump election. It's going to get more accentuated. Now, what does one do? At the highest level, before we reconcile ourselves to things like universal basic income, which has got all kinds of issues with it, we can't we can't give up, right? You have to equip labor with the best possible chance to compete with capital. And what that means is education, skilling, health, right? Enable labor to accumulate as much human capital as possible. In India's case, it means, even our growth in the last 25 years has become very capital intensive. As manufacturing has become capital intensive. In India's case, it means liberalizing labor laws so that when entrepreneurs are choosing between capital and labor, you're giving labor the best possible chance to compete with capital. Now, the difference about AI, as I mentioned earlier, all the earlier technological progress was skill biased. So if you could move up the education ladder soon enough, your job was protected. In fact, you got a premium, a skill premium as a white collar worker. AI challenges that theory because AI in theory could, is going to be neutral across the board and wipe out even very skilled jobs, right? Having said that, Monika, it's important not to jump the gun. These are what people expect the future is going to hold. So far, we haven't seen use cases yet. They could be down the line that are as dramatic as has been promised. That this is not as transformational as, and some people will argue that, the promise of AI is so far just a promise. There's no evidence to suggest it's going to be so transformational. Now, if it does happen that society becomes more unequal and people start promoting the idea of universal basic income, we have to realize that that's not a panacea or an antidote because a job is more than just about earning income. It's a sense of accomplishment, identity, right? The whole opioid crisis in the US was because people were unemployed, right? So yes, we could transfer resources to people, but I think that will not protect society from social, political pressures. And the whole UBI thing also presumes there's fiscal space. The world today doesn't have fiscal space. Just G7 economy debt is 130% of GDP, and taxing the billionaires presumes that governments in these countries will want to tax the billionaires. In fact, quite the opposite is happening, where the concern is the billionaires are writing the rules of the game rather than being taxed. Right?
Right. So you said that we need to spend energy and time in skilling up labor and getting them up to speed. But when you look at the labor market in, say, the EU,
yes,
people don't want to work. Weekend begins on Thursday evening. After 5, you don't get a mail answered. So that is a set of labor source which is not willing to work. So I'm not sure. Like, see, we cannot.
But I'll point to emerging markets. I'll point to India and Asia and China, and people want to work. Exactly.
No, so we are hungry for work.
It won't be one size fits all. But we can't say, the answer to AI in India is just tax a few people and give handouts to everybody else. Right.
So it'll be different for country.
There'll be country-specific solutions. Right. One will also argue that populations in many of these countries in Europe and China and Japan are aging. Who's going to be most at risk here? Will be emerging markets. Will be young economies like India. Right? So those are the problems you have to solve in the next 10 or 15 years. I'll make one quick point related to this, because people blame globalization, right? Oh, the problem is globalization. The problem was not globalization grew the pie in the US. The failure was a public policy failure of redistributing that pie sufficiently well, not just resources, but giving people in those communities that had been battered the chance to reskill, find other jobs, upskill. That's hard work that policymakers don't always like. But we can't be hopeless about this, that nothing is going to happen, because I think we'll have a huge social problem on our hands.
Right. So just one more thing on this. Again, I'm sort of, my generation has lived through that whole socialist India. So when you hear things like Mayor Mamdani talking of rent control and free, is there any example in the world where rent control or wage control or minimum wage has actually benefited those that it was aimed at? Because this periodically comes up.
Yeah. No, there isn't. And I think it's the example of the world in the last 50 years has clearly shown that these socialism streaks never work. They may be politically appealing in the near term, but they're not economically sustainable in the medium term. Okay. Right? And what is the road to hell is paved with good intentions, right? One can even argue in the case of India's labor laws. They were meant to protect labor, but it's turning out to be a disadvantage to labor. Yeah. But I think, in the fact that the prescription, the policy prescription may not be justified or sustainable, we shouldn't lose sight of the underlying diagnosis. There's this phrase, right? The precariat. The precariat represent this new class of people, sometimes college educated, sometimes but who are economically insecure, right? And I think we shouldn't lose our sight of the fact that there is a growing class of people around the world who are facing a lot of economic anxiety, right? Because capital has taken the large share and income and labor is falling behind. And putting our heads to how to resolve that tension, I think, is a real one. The answer is not free, but at the same time, there's a real problem there that people are... the election of Mr. Trump, this sets us up to populism on both sides. Mr. Trump also campaigned as a populist on the right. There are populists on the left, right? So I think addressing the fundamental issue of how do we solve the employment problem in a world that's becoming more and more automated? How do you give labor the best chance to compete with capital? I think are the most pressing questions of our time.
Yeah. I remember I read this as Isaac Asimov's story many years back. And this is like a future world.
Yeah.
So there's this giant building where everything happens. People live there and there's offices. So there's this worker whose job it is to tighten the bolts.
Right.
Okay. So you get universal basic income. If you press buttons, you get a basic meal. That's free. But if you want an egg, then you need to work. And his work was to tighten the bolts. And one round of that building takes him a year.
Right.
One day he meets somebody coming from the other side. So he says, what is it that you do? He says, my job is to loosen the screws. Right? So...
yeah.
Dig holes
so
and
we're going to dig ditches and fill them up. Exactly.
So some policy intervention in that space probably.
Yeah. But I think there's a lot of low-hanging fruit that we can get to before we get to digging ditches and filling them up.
Okay. No, I want to move to the question of debt. we are sitting on a bloated pile of debt
Yes.
globally. I think
Yes.
India, I'll come to India in a bit, but I think we are doing really well in terms of our fisc and macro story looks great when you look at the debt.
We're the elders in the room now on macro stability.
Absolutely. Yeah, they can learn from us. And again, whatever predictions you see right now is talking of a major collapse in terms of the currency, the dollar, and the markets. And somewhere, would you agree that gold has made a comeback after it lost its place in the room after the 70s, moving away from the gold standard? Where is the world going from here in terms of supremacy of that one medium of exchange store of value? We are looking for that medium of exchange store of value. We don't want it to be the yuan. For very many reasons. We would like it still to be the dollar. But then that's not what's happening.
The dollar is doing the best to discourage
people. So is it going to actually be, and crypto again is, you can't trust a privately held code to trust your money with the store of value, all of that. So where is this discussion? How serious is this debt problem? Because I know in India, the way that the governments earlier solved the high debt and inflation problem was, high debt problem was through inflation. They inflated the debt away, right?
Is that
what are they going to do?
Exactly. So just one last plug. There's a great book by Claudia Golden on the earlier topic. It's called The Race Between Technology and Education. She wrote this book in 2010. So she's prescient about this.
Wow.
Right? So it's ultimately this comes down to a race between technology and education. Now on the debt problem, just a little bit of history here. Post the global financial crisis in 2008-9, fiscal orthodoxy prevailed. And fiscal deficits tightened everywhere. In Europe, in the US, prematurely. And monetary policy was the only game in time. You took rates to zero and you did QE1, QE2, QE infinity. And 9-10 years later, policymakers realized that was a mistake. Fiscal policy had become too tight, right? And easy monetary policy was only making the income inequality problem worse, right? And all this, the debt that we're going to hell didn't come true. As is always the case, you overcorrect. So by 2018-19, the prevailing wisdom is fiscal was too tight, monetary was too loose in the last crisis. Let's not make that mistake again in the next crisis. Now, when you tell policymakers that, they will make exactly that mistake. So what we've seen post-COVID is that fiscal has now become the main game in town. And we've had massive fiscal interventions in the US in particular, around the world, which along with lower growth has meant debt to GDP is now, as I said, the G7 debt is today at 125% of GDP and conservatively supposed to go to 140 or 150% of GDP in the next 5 years, right? So we're playing with fiscal fire. But people will push back and say Japan has debt of 230%, nothing really happened. And my worry is the politics everywhere is in a state of competitive populism, right? We saw the one big beautiful bill. It's just made US's debt position worse. I don't see any visibility on people coming together to say we need to have a sustainable problem. So we're going to be in this world where you'll occasionally see a Liz Truss problem happening around the world. Japan is 230% debt. The new prime minister's come in, Tanaichi-san, and she's saying we'll do more fiscal, right? So again, it goes back to that first vulnerability. When you have a precariat and you've got this income insecurity, politicians do what they know best. We'll throw some money at the problem through fiscal spending. So I think we're in very dangerous and uncharted territory for developed economy debt. What does this mean for currencies? It's tempting to say that the US dollar will cease to become the reserve currency, but there's a TINA here. There is no alternative. Where will you find that kind of liquidity, right? And where will you find the law and order that you need? So at the margins, people are moving away from it. Central banks are diversifying away from dollars. If you look at commodity pricing, commodity contracts are increasingly priced in non-dollar currencies. You're seeing this happen at the margins. But, at this point, I don't see any fundamental alternative to what the US is. On the gold issue, the worry is what? Debasement, exactly what you said. So why are people holding gold? There are many factors here, but first is in 2022-23, once Russian foreign reserves were impounded by the US, central banks said, listen, if this is what's going to happen and the rules of the game can change overnight, I want gold in my vault at home. right?
We got it back as well.
We got it back.
Yeah.
Right. So the first impulse for gold came there from central banks, and that process is continuing. And the second impulse is, well, if you worry that these deficits and this debt is unsustainable, there will be pressure on central banks to undertake either financial repression or to downlight, inflate away this debt. And in that environment, you want to buy gold. So I think that's the impetus behind gold. This will be tested, Monica, in the next 6 months, because the US, as I said, inflation is picking up. Think of what we just said. We said the US has put on tariffs, which is a negative supply shock. The US has put on immigration curbs, negative supply shock. These are both inflationary. Then the US is engaging in expansionary fiscal policy. All three things together will push inflation up. And that environment, you want an independent Fed that's going to say, no, we can't cut rates. But in 6 months' time, if you have a Fed chairman that's been appointed explicitly to cut rates, no matter where inflation dynamics are, then the concerns about debasement and the US living with higher inflation and the need to protect yourself by holding gold will only increase. So this is all going to come to test pretty soon.
Okay. And I want to segue into the emerging markets.
Yes.
Now, what happens to... So these are developed country problems right now. The emerging world is looking very different.
Yes.
In terms of the desire to grow, the desire for of labor to work, for markets, for the way that we handle our finances. What is how does what happens in the US impact the emerging markets?
Right. So I think the good news is emerging markets are now the elders in the room. And, because they learned their lessons largely in the taper tantrum of 2013. And everybody's tightened policy frameworks a lot. India is the epitome of that, but there are many countries where there are fiscal frameworks, inflation targeting, people hold reserves. What that's allowed emerging markets to do is when a crisis hits, you don't need to be pro-cyclical. Right. You can actually undertake fiscal loosening and not worry about markets punishing you. Or you can occasionally cut rates without the Fed having to cut. So you've earned that credibility. The good news is on macro stability. Where I worry is there's so much focus on what's going to happen to the US and the discussion we just had, and China and potential growth in China and the housing crisis and anti-involution, that I worry that other emerging markets are getting caught in between and may well be the real casualty of what's happening. And I think there are three shocks, one of which we've spoken about, that emerging markets will face in the next decade. The first is this de-globalisation. If you draw a line of emerging market growth, just growth rates annually, ex-China for the last 25 years. And you draw another line saying global trade volumes. It's the same line.
Yeah.
We underestimate, including in India. We had that big burst of growth in between 2003 and 2010. It was all driven by exports. Exports were growing 18% a year for a decade almost in India in the period of hyperglobalization. So emerging markets have derived far more from exports and global engagement than we give them credit for. Only 13 economies in the world have grown at an average of 7% or so for 25 years, at a 25-year average, since the Second World War. Only 13 economies. They all had one thing in common: massive global engagement. So the question for emerging markets, including India, is, in a world that's becoming more deglobalized and economically balkanized, how do you generate export growth? Challenge number one, right? And we can talk about what some of the answers are. Challenge number two, part of the Trump appeal in 2015 was you had a China shock. China entered the WTO, made these labor-intensive goods, sold it to the US. It hollowed out US manufacturing. Now the US has put on massive tariffs on China. Despite the recent deal, the effective rate tariff on China is 33%, right? What is China doing? China is redirecting its exports to other parts of the world. China has got massive excess capacity right now, right? Domestic demand is weak. It has to export that to other parts of the world, right? Where is that going? To Asia, to ASEAN, to the Middle East, to North Africa, to Latin America. So now if you go to Thailand, the entire auto sector there is hollowed out because of Chinese EVs. You go to Indonesia and you will see that the small, medium enterprises are struggling because they can't compete with the Temu app.
Yeah.
India's bilateral deficit with China has gone from 0.5% of GDP to 3% of GDP, right? So now emerging markets have a second problem. You can't export out. And now you're trying to protect your domestic manufacturing base from cheap Chinese imports, right? And so now you're not only worried about offense, you're playing defense at home to protect yourself from these Chinese imports. And the third shock in my mind is exactly what we discussed, capital labor ratio shock. These are young economies. They have to create jobs in the next 10, 15 years. We've had so much automation, activities becoming so capital intensive. How do you create jobs? And so for me, it's a trifecta. And so while focusing on the US and China, we should not lose sight of the challenge that the current global reset is posing to emerging markets over the next 10, 15. We have to seriously rethink our growth models over the next decade.
Who is doing what about it? Is there any example of, name a couple of emerging markets who understand this three-part problem and are addressing it? I think we are doing it to a certain extent.
It's too early because I think the trade problem, the de-globalisation problem is just 4 or 5 years old. Emerging markets have been struggling to cope with the scarring of the pandemic. The Chinese import issue is happening the last 2-3 years in particular. It's too early to cite examples of countries that have successfully navigated it. But what will this entail? This is going to entail there'll be a significant premium on becoming more competitive. So those emerging markets which can do foundational reforms to become more competitive can simultaneously combat both issues. Because if you become more competitive as a country, even if the global trading pie is not growing, all you need is a larger slice of it. Our share of global manufacturing exports is less than 2%. It's been that way for the last 20 years, right? We don't need for the pie to grow. We just need for our share to grow within the pie. And we have shown to the world, when you leverage your comparative advantage, like on services, like the GCCs, for example, our share of global service exports has more than doubled in the last decade. So I think the first is that you have to do, in our case, that's going to be, the second generation reforms to become more competitive.
Right.
One more thing I'll say is there's a premium also on creative destruction. Again, coming back to Adam Smith, and that is where in a world where there's such rapid nonlinear technological change that what are sunrise sectors today become sunset sectors day after tomorrow. And economies and societies that allow capital and labor to easily move from one sector to another will be best prepared to handle this roller coaster change. So I think there are some foundational principles that will have to govern policy in emerging markets.
Right. And you don't think that India has a very unique situation because of the large domestic market? So I'll say 2 or 3 things here. One is that the number of people below that poverty line has drastically fallen. Where have they gone? They've gone up the income scale.
Yes.
And where have the people above that gone? Into lower middle class, middle class, non-poor.
Yes.
So your size of your domestic market is rapidly expanding.
Yes.
Do we have this one chance to use our own domestic market as the absorber for this production?
Yeah. No, it's a great question. So I think the first point is, what you touched upon is just the benefits of growth compounding.
Yeah.
Right? We've grown at 6.5% for 25 years now. Right. If you're doing that every 10 years, you're doubling, and that's the best way to pull people up the income scale. I think the domestic market is a good complement to, but I want to be slightly controversial here, but not a substitute to the exporting market.
Okay.
Because the global market is just so large that yes, we've got a domestic market. And so the attraction is why would firms be incentivized to come and locate in India, multinational firms? Because you get the best of both worlds. In theory, you'll have cheap labor or in India's case, it's skilled labor where we have the advantage, white collar workers with MBAs and engineering degrees that are much lower cost than the rest of the world. But you can service a large domestic market, but you can also make it a base to serve the export market.
Like we've seen in automobiles, for example.
Exactly.
Right.
So the domestic market helps. But I think I come back to the earlier example. No country has grown at 7%. You can grow 7% as Latin America has shown for a few years. But you can't do that over 25 years.
Right. So I'm going to move to now India, which everybody wants to hear the growth story and what is happening. I believe you were in a pre-budget meeting with the FM. I'm not going to ask you what happened there. But so I've also analyzed budgets for many, many years, and every budget has a theme. Right. So post-COVID, there was a story of keeping the deficit after that spend under control and also pressing the pedal on the capital expenditure.
Yes.
25 was income tax relief, and then of
Yes.
course this GST.
Yes.
I'm not seeing a theme for the budget 26. What, in your opinion, would be something that the budget will target? Because every budget has a story.
Yes. Yes.
I don't know what the story will be in 26.
It's a good question. So as you rightly said, focus first was on capex. One recurrent theme has been a focus on macroeconomic stability and fiscal prudence.
Right.
So deficits will slightly go down. Right?
Yeah.
Within that, tax relief has already been given. So there's no space on the tax side. But one theme that we sometimes don't realize is in the July budget of 2024 and the February budget on 2025, there was a focus on labor-intensive growth. So the July budget spoke about giving incentives to firms to hire more people. The February budget spoke about exports and the need to focus on labor-intensive exports. I don't know what the theme will be. If you ask me what the theme should be, in light of the conversation we've just had, it has to be on how do you make growth more labor-intensive.
Okay.
Right? And it has to be one where we cannot succumb to export pessimism. And I was very heartened to hear the finance minister say last year, we're very determined to push ahead on export-led growth. We've had notable successes since then. The India-UK deal is done. The Euro deal should be done hopefully soon. Hopefully,
US.
the common sense will prevail, and the US, we're getting closer.
Right.
So if you ask me, having provided tax relief to boost domestic consumption, having done public investment in the last few years, and that is an ongoing story, the ratio to GDP may stabilize, but the growth rate will be in line with nominal GDP every year. I think the focus is how do you make growth more labor intensive, because the tax cuts will give you a one-time boost for consumption. To sustain that, making growth more employment intensive sustains consumption, which then drives investment.
But that would involve labor reform, and that bill has not been notified, I think.
So I believe the bill has been passed by Parliament. But the states haven't implemented that. Now, that doesn't have to have in the budget process. But I think since the last budget spoke about incentives for labor-intensive sectors, right? So, if you're thinking about an incentive structure, again, I'm not a big proponent of the government intervening too much in the economy. You have to show where the market failure is. But a broader program, how do you make growth more labor-intensive? What we should certainly stay away from is subsidies to capital.
Okay.
So anyone that says give accelerated depreciation to these new sectors,
right.
We're undoing.
Yes.
Right? You want to coming back to capital versus labor.
Right.
You want to push labor up, not give capital more subsidies and more support.
And how do you do that? How do you give incentives to people to employ more people?
That's one part of it. I mean, if the state is going to give incentives, it should be in sectors that are very labor intensive. One benefit of what's happening globally is China has made a hard pivot to very capital intensive tech sectors.
Yes.
The EVs, solar panels, the whole green transition. They are vacating space in the old, boring, labor-intensive sectors: textiles, toys, gems and jewelry, leather, footwear. This is India's opportunity. So if the state is, I'm not saying they should, if the state is going to give incentives, it should be in those sectors that employ a lot, right? And over time, we want to nudge states to implement the labor laws. We want to make big investments on health, on education, on skilling, all of which the government has made a priority in the last 5 years. We want to bring those things together to say, when we began this conversation, what package of things can we do to give labor the best possible chance to compete with capital?
And with your interactions with people in the government, do you think there is this realization that unless we do it, we have really once in a lifetime chance of getting this right?
I think there's a very high level of sensitivity and a high level of understanding of how important this moment is, right? Because on two dimensions, this moment, the next few years are really important. One is what's happening globally. Wherever the China-US relationship settles, there's a bipartisan consensus around the world now, or in the US in particular, that China and the US are strategic competitors for the next 50 years, right? And so firms want to hedge themselves outside of China. 5 years ago, China plus one meant ASEAN, Vietnam, Indonesia, Thailand. Now what the Trump administration has showed is that will not pass muster. You can't build a factory in Vietnam, import from China, package and sell to the US. The reason I'm saying this is a lot of multinational companies will say that if you really want a hedge away of China plus one, you have to go outside of ASEAN, and that's where India looks so attractive. And therefore, getting a trade deal with the US and normalizing that relationship becomes important because it becomes more attractive. So the next few years, once these multinational companies move, Monika, they don't move every decade.
Right.
So they're going to make this decision now, and then they'll stay there for however long.
Right.
The second reason why the next few years is important, I'll just say, is demography. We keep saying demographic dividend. Do you know how close we are to the peak of that dividend? Our working age to total population ratio was 60% in 2000. It's jumped to 67% in 2025. In 2032, it peaks at 69%. And it stays there till 2037. So we have 12 years more. After 2037, that ratio is going to come down, which means dependency ratios start rising with all of the other issues that creates. So the next decade is really crucial because this is the time to maximize on the demographic dividend. And this is the time that the world is going to give you the best possible chance in trying to attract FDI and multinational companies because they're resetting at this point.
At a policy level, is there recognition that there's a window, it's shutting, we need to slide through?
I think that's clear. I think that's clear. And you know, let's not undermine the successes we've had. Apple has moved to India in a big way, but look at the state of Tamil Nadu, for example. I was in a conference recently where I'm so impressed by what Tamil Nadu has done. So many multinational companies have come up and set up. Manufacturing is growing very rapidly in Tamil Nadu the last 3-4 years. And the model is very China-like. You've got dormitories on campuses. Half the labor force is women, highly skilled, who are staying in those dormitories and being, and so some states have shown how this is done. And the hope is competitive federalism. I think India has many structural advantages. One of them is competitive federalism will allow this model to then get diffused in other states.
Which other states are getting competitive?
So, I mean, we're seeing the typical has been the southern and the western states so far, right? So it's been the Maharashtra, the Karnataka, Gujarat, Tamil Nadu. But what I'm very heartened to see is now there's real competition for the next dollar of FDI.
Okay.
Everybody wants the next factory, Apple factory, to be in their state. Okay. And the difference between now and 15 years ago is, previously when there was no GST, the instrument that states would use was to cut taxes. Come and I'll cut your taxes. There was a race to the bottom. Now with that instrument gone away, it's become more of a race to the top. I'll give you land faster. I will give you single window clearance. I will, try and get you skilled labor. So these things, reform, I think in India now is going to happen horizontally.
Okay.
It's not going to happen vertically because the things we need to reform, education, health, labor, are all state subjects. So they take longer, but hopefully it's more sustainable.
Yeah. So in personal finance, when we do calculations, 1980 to 2020, the average annual rate has been around 7.5% for inflation. And when you do your retirement calculation, it's a very difficult calculation. How long will you live? What are asset prices then? All of that. Is it fair to say that we can think of a 4% long-term inflation from here on? Because earlier we've done calculations on 7.5% year on year. Is it fair for us to then budget in 4%?
I think so. That's the central bank's target. The central bank in large parts has achieved that target. And inflation is all about anchoring expectation. If all of us believe that 4% is here to stay, the way we will adjust our wages and prices and calculations will reinforce that 4% target. So I think 4 to 5 is where we should expect inflation to be on a sustainable basis in the medium term. Okay. Full disclosure, I was on the committee that proposed this in 2013. And the question is, why 4? Why not 5 or 6, right?
Yeah.
And very simple, that if you do some economic modeling, what you find is, in India's case, when inflation sustainably gets above 6%, it leads to macroeconomic uncertainty that hurts growth. So you can't have there is no trade-off between growth and inflation in the long run. At 6% inflation, that's going to hurt real growth. So 6% was your upper band. You don't want to get too close to the lower zero bound problem that developed markets have. So 2% was your lower bound. So we have 6 on top, 2 down. You have to have some wiggle room because food is 45% of the basket. So we picked 4.
Okay.
Right? So that's how the 4 came about. That you don't want to be at 6, you don't want to be at 2.
That's the question I wanted to ask for so long.
You split the difference.
Who fixed this?
Yeah.
Now, you fixed it. Okay.
So that's, and I think it's worked well.
Yeah.
Right?
Right.
So I think it's worked well. Inflation I think most people will say that, the one part where policymakers deserve unambiguous credit the last 15 years, right, is the institutionalization of macroeconomic stability.
Yes.
There was a belief the morning after the taper tantrum, it says never again, right? And at that time, inflation was running in double digits. The current account was at 4% of GDP. The fiscal was out of whack. So I think what we've seen is there's an inflation framework that successive governors have very dutifully followed. I think it's here to stay. So inflation expectations are down. Real rates are positive. There's a very credible fiscal framework driven by debt. That what ultimately matters is not even a level of debt. What matters is debt stable and gradually coming down.
Right.
If you think of personal finances, that's what you want.
Yeah.
I don't want leverage to be going rising all the time. We have high reserves and a low current account deficit. So I think there is a concerted effort to institutionalize macroeconomic stability.
Right.
I do 10-day meetings in the US, and you can go through an entire week without people worrying about India's fiscal deficit or current account deficit or
Which
inflation,
is new.
which is remarkable. It's like
Yes.
we never give the goalkeeper credit enough
Right.
for the goals he stops.
Right. Yeah, absolutely. Where did the household money go? Because we've seen their savings rates go down. Demand was down. Where is the money?
So if you look at urban consumption, it was very strong the first 3-4 years, right? And what you see is what was propelling that. You had all these excess savings that were built in the pandemic, which by 2024 were exhausted. Urban wages were growing at 15% a year. If you look at company data 3 years ago, but that wage growth now from 15 has become closer to 8 or 9. So there's been some softening over there. Leverage was, you'll know this better than me, the uncollateralized lending was growing very rapidly. And the RBI correctly said that, hey, this is too much of a good thing. We worry about financial stability. We're going to slow this process down. So I think the underpinnings of the urban consumption pickup, which was excess savings, easy leverage, low debt, and high wage growth, have all slowed, which explain why urban consumption has slowed. Rural has picked up right now.
Right.
But you need for it to broaden into urban as well.
So I've actually thought a little bit about that. And could it be that some of this money was going into gambling? The F&O market was very large, which SEBI has clamped down on. And the online gambling. So everybody was, literally everybody on the street was doing whatever, teen patti or whatever they were playing. There was actually like millions of rupees going into that.
Right.
So do you think plugging those two holes could actually increase consumption or savings or both?
So plugging those two holes, agricultural incomes improving because agriculture, wealth effects from more and more retail participation in the stock market, all of these things could help at the margin. Of course, the medium-term answer is always employment.
Right.
That the more high-quality employment you create, the more sustainable consumption is going to be, and you can then build savings back up.
So we are hearing that the Q2 growth number, GDP number, is going to surprise us on the positive side, and the FY26 GDP number is going to actually breach 7. Like, do you think it's actually happening?
We're very close to that. So the first quarter being 7.8 just lifts the entire year. Okay. I think second quarter could well be above 7% again.
Which is quite interesting.
We need to be a little bit careful about two things. Again, the full year is going to be close to 7, which is a very good outcome. But first half is going to be a little stronger and the second half a little softer. Okay. And we shouldn't overinterpret either. And the reason the first half is going to be stronger is the base effects from last year are more favorable. Fiscal policy has been heavily front-loaded this year. Okay. It was back-loaded last year. So when you get front-loading over back-loading, the first 6 months CapEx numbers will look great. The second 6 months it will look troubling. You have to smooth this out. So you had, favorable base effects. You've got fiscal front-loading. There was the issue of a deflator. We can avoid a discussion into that, but there's a deflator issue. But I think the broader point, apart from GDP numbers, is these factors that I spoke about on consumption. What legs do they have? We're off to a very encouraging start. Auto sales in the last 12 weeks are growing 10%. If that can find its own momentum for the coming months, then the outlook will.
You're encouraging me to upgrade my car like in 3 months.
So I think of India's macro outlook being a tug of war between external headwinds, which are US tariffs, and domestic tailwinds, which are all these 6 factors. 30 seconds of good news. So far, at least, the tariffs have not had such big of an impact on Indian exports. It's very early days. While exports to the US have fallen, for now, Indian exporters have found other markets. North Africa, Hong Kong and Asia as well. But let's hope we get a deal soon, because the longer this goes on, the more the pressure will rise.
Correct. So last couple of questions. So I met a friend after a long time. He's a career NGO worker. He's retired. And he said that so the new companies which have come up in the last 10 to 15 years, some of them are unicorns, some of them have listed, they have set up NGOs. So he says they go about it in a very different manner. We are very, very old school. These people are far more focused on outcomes. It's a very different way of running the institution. You think that these new post-liberalization entrepreneurs, not the legacy ones, will have a different way of doing business? The old guys are go to FICCI, CII, tax kam kar do, tariff, so tariff badha do, so give us protection. They are just like, basically they are wanting subs from the government.
Yes.
These guys are fighting on the market. I mean, who would deliver things in 10 minutes in your home? And the employment, the kind of people who come to give you those things, some of them are really well dressed.
Yeah.
So, fundamental change in the way business is done.
Absolutely. Right? And this is the creative destruction I spoke about. For me, what gives me great hope is just the entrepreneurial dynamism and the energy of this country. Right? There's a country of entrepreneurs, right? And I think that you're right, that this is a new and bold way of doing things. It's one where you don't rely on the state, right? And that's a whole new mindset change. And therefore, we have to ask ourselves, what is the role of the state in the next 10, 15 years? It's one where you perhaps see at a time, so what is the new Washington consensus? Well, I find more trade restrictions, more immigration restrictions, muscular industrial policy, we're going to fix everything in the economy ourselves, and a benign neglect towards public debt. And I think it's a toxic mix. We have to stay clear of those impulses. When you've got so much entrepreneurial energy, right? Look at the GCC phenomena. Right. The state didn't do that. This was just, again, the dynamism of entrepreneurs to say, this is India's biggest asset, and it's grown dramatically. So what is the role of the state? In my mind, it is about creating a level playing field, light but consistent regulation, providing public goods in abundance, and only stepping in where there are market failures. And let's identify what is the market failure and when should the state step in. Because I have great faith in India's entrepreneurial dynamism. I think the combination of a young population, all this entrepreneurial energy, a high savings rate sets us up very well for the next decade or so. But I see these young people and I'm amazed at their desire, drive,
Yeah, it feels like two countries. There's one set of people sitting and cribbing, and there's one set of people who's just doing stuff.
Sometimes you don't appreciate. In India, look at our airports, right? Or I don't use cash in India. I don't think I have used cash in the last 6 or 9 months. Yeah. Whereas I go to the US and I still see people writing checks in those days. So there's a lot going right for us. We need to harness that to make sure I come back like a broken record, labor-intensive, 7% growth for the next 10, 15 years. Yeah. That's our answer to becoming a middle-income country.
Right. Okay, last question. So when we were growing up, we were told, work hard, be sincere, you'll do well.
Right.
And our generation pretty much did that, right? We just worked. That equation has broken down in the West in terms of people have 3 jobs, that whole hollowing out of the middle class. What would you tell somebody who's 25 today in India? Does that equation work for him and her? That work hard, do well. You will do well if you work hard.
Absolutely. For me, who am I to give advice? But it would be accumulate as much human capital as possible, right? So when young students come to me to say, I want to be an economist, or I want to do this, sometimes I worry that they're worried about the fruits of that job. I want to be on TV or write an op-ed, right? I keep saying that you must love what you do.
Right.
If you love what you do, then you will wake up every morning excited about it and you'll be very, very good at it. So I remember, I'm a big cricket fan, so I remember Rahul Dravid, I think 20 years ago, one of India's best batsmen, the wall, was asked, but when will you don't have as many endorsements as XYZ, you haven't done XYZ. And he says, you know what, my focus is on my batting.
Right.
If I do my batting very well, everything else in life will take care of itself. And that's exactly what happened to him, right? Coach, captain, all of it. So I tell students two things. You must love what you do. And in a world in which generalists are going to be increasingly valued less, that's my belief, and specialists are valued more, accumulate as much human capital as you can. The combination of a lot of human capital accumulation and loving what you do, so you're consumed by 24/7, I think is the best chance you have of succeeding in this turbulent world.
Yeah, and pick something which has market value. I mean, you finally have to love something which the world will also value.
You know, Monika, that said, but it's hard to imagine what the world is going to value 5 or 10 years. I want to give my mother's example. My mother started a nursery school in our home in Koregaon Park in Pune. At that time, this concept of a private Montessori learning by doing method was not at all fashionable. Right? You had some old schools. But she loved it. She was trained as a teacher. And she says, I need to start this new method. And the school, and she had no future idea of whether this will be profitable and what's going to be. She began our living room and our bedroom in our home used to be converted into a little classroom from 9 to 12 when we were away in school. And she began with 5 students.
Okay.
Right? And she's still the principal of that school 40 years later, and it's grown, exponentially over the years. And again, it goes back to those attributes. She loved what she did. And she said, if I just follow my passion, there is a niche for all of this. So I'm a little bit wary of saying, what are the successful careers going to be? We don't know. Do what you love and do it well. And the world will find a way to make sure you succeed.
Yeah.
That's been my experience.
No, absolutely. Like I was thinking more of, some people misuse this whole idea and say, oh, I like, writing poetry, or I like watching the traffic go by.
Yeah.
It has to be something productive, right?
But if you write great poetry, one day, who knows?
Yeah,
You're right, but you're right, you're right. Yeah. You have to be pragmatic about it.
You have to be pragmatic. I mean, you have to do something which is either helping people, filling a need, something for the other, rather than something which makes only you feel happy.
And everything has become so democratic now that there's so many people are able to express their view in so many different ways, right?
Correct. Absolutely. So this is wonderful. Yeah. And also, I think I'm going out of this with a lot of actually hope for the next few years for where we are right now and what the potential can be. So
we're at
a
really important moment. There's a lot of potential, and I think hopefully we can realize that.
Yes. Thank you so much.
Pleasure. Thanks for having me.
That was a great conversation. I do these so that you can join the dots and make up your own mind about the India story. Tell me who you'd like me to invite next on the Growing India podcast.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing. Please read the risk disclosure documents carefully before investing in equity shares, derivatives, mutual fund, and or other instruments traded on the stock exchanges.